This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In today's video, we'll be going over the datasets, the earnings, and the SPY technical analysis for January 28th, 2026. And with that said, let's go ahead and jump straight into the data. Now, we did have some data sets on the 27th, and some of them were actually very, very important. We had the CB consumer confidence come in, and I discussed this quite a bit in the last video how this number has been pushed below a recessionary number for quite some time now. I want to say about 5 months. I'm not able to check right this second, but it's been pushed below that point for quite a while now. Now, it is a soft data set, meaning it's based on opinions rather than hard data, you know, actual physical hard data that some of these, like the BLS gets, for example. Um, for example, like the ADP employment change weekly is a hard data set. It comes straight from automatic data processing. That's what the ADP stands for. So it's hard data. CB consumer confidence is opinion based, but this still holds a lot of weight. This is still telling us a very, very clear picture that I've been kind of discussing for months and months and months that I do believe we're getting ready to enter a major recession. Now, there's still a lot for things to happen in the macro sense before that, but that's really not for this video. We'll talk about that in a later video. We had the 5-year note auction come in, and it did come in slightly above the previous yield. We did discuss that being a possibility. Not too interested in the HPI composite stuff. That's just discussing basically single home houses. If how much the prices went up on them or not. So it's just slightly above the forecast. Nothing major. Now, for tomorrow, the 28th, very, very big day, even though the data sets don't look like it. We have President Trump speaking at 8:30 a.m., unless the time changes, but so far, currently, it's at 8:30 a.m. And after that, we have the FOMC at 2 p.m. That includes the statement and the interest rate decision. And then at 2:30 p.m. we have the press conference with Jerome Powell. And usually that's, quite a volatile event, volatility being both upward and downward action. Now, with that said, the interest rate is pretty much priced in almost 100% for a pause tomorrow. Unless there is something major, major, major going on that the majority of the market is not picking up, that only very, very few in the Fed know about, where they absolutely have to drop rates basically imminently to prevent something major from happening. Um, the pause will happen. So any expectation outside of that is completely unpriced right now within the market. The market is almost 100% expecting the pause to happen. Now, what's really important is within the statement, if we find any different language compared to the last 1 to 2 FOMC statements, that's something I'll specifically be looking for when I read over the actual statement. Um, Other than that, we will have the press conference start at 2:30 p.m. And generally that means Powell will come out, read the FOMC statement, make some remarks, and then after that he will get into the press conference part where he starts taking on press questions. Now usually the press questions are pretty good. Last FOMC, I didn't really like the questions at all. I thought they were very weak. But usually the press does a pretty good job pressing about, um, you know, pretty important issues. So I do look forward to listening to the press conference live. It is very, very key and crucial moving forward, because what we're really looking for out of an FOMC is the monetary guidance moving forward. We already kind of know what the monetary stance is going to be for this meeting. The CME
FedWatch has it priced in. Again, you can look at that within the links on my video. I believe I have it there. If not, I should. Other than that, that's going to be a lot of data in a very short amount of time between the president and Powell speaking. Okay. Whatever Powell says is definitely going to continue into Thursday, but a reminder, and this will kind of segue into our next section, is that we have some major earnings happening in the after hours on Wednesday, with those earnings being Tesla, Microsoft, Meta, IBM, Lam Research. I mean, some really, really major names are in here. Um, I am looking at ASML in the morning. Again, it doesn't hold a lot of weight in terms of the actual market because it's not an American company, so a lot of the weight that American companies get will not be transferred into it. But ASML is still probably one of the most important companies on the planet just because they're the ones producing all the major semiconductor machines. So, or the semiconductor fabricators, whatever they're called. They're all ASML machines, so very, very, very important company. But do their earnings really matter? Not really. They can't be replaced right now, so they're pretty much set. Um, I am looking forward to hearing from Elevance in the morning. I know United Health Group did not do all that great in their guidance and everything, so my shares in that are down very, very slightly. If we do get a bottom Bollinger Day 2 on that, then I might try to tack on a couple shares just to, average down slightly. My average is currently in the 292, so really not that much above the current price, and I'm very happy averaging into Medicare companies right now. With that said, between the data we have during the session tomorrow and the earnings, it's going to be a very, very, very eventful day. So just be prepared for a lot of volatility both on the upside and downside. If any of these major top mag companies have a fail, that definitely can pull a lot of weight from uh, the potential upside that I'm personally seeing currently happening within the SPY and tech overall right now. But I'm not too concerned. I don't think that the market narrative is extremely earnings based right now. I feel they're very, very keyed into what's going on with monetary policy stance moving forward, and then kind of what the guidance on that is for the rest of the year. So um and a lot of labor issues, or a lot of the labor market issues, a lot of the consumer market issues are the real major narrative points right now. I don't feel like many people are too worried about the whole AI bubble popping. I don't think that's a huge, huge concern with these companies, at least. Now, when we move forward towards, let's see what we got next week. Duh, 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 duh. Have some important ones: AMD, ARM, Amazon, Master. Is Nvidia? I think it's the end of that month. It's really Nvidia that is going to be the one that makes or breaks the market. Um, because I mean, obviously, Nvidia is the market leader right now, and not that some of these other earnings can't do some damage to the market overall. But for example, if Tesla misses right now, does that really matter? Because for me, Tesla's an evolving company. They're trying to basically um get heavily into robotics from what I know. So I'm not too concerned about Tesla missing in earnings right now. Same with Microsoft. Microsoft's in a very, very good spot right now. Um, its overall debt ratio and everything is very, very good. So am I concerned about Microsoft really missing in earnings right now? No, not really. Perhaps out of any of these, maybe Meta, just because a lot of Meta's business does come from advertisement. And when consumers start struggling, advertisers start having to pay a lot more. So, you know, recessions hurt advertising quite a bit. And not that we're in a recession right now. The data is not suggesting that because of the previously high GDP prints, but you know what I'm saying is that really out of any of these, I think that Meta has the most room to fall. Um, I mean, what? Tesla could pretty much say that they're going to stop making cars tomorrow, and I don't think it's really going to hurt the company all that much. Like, yeah, they take a hit, but in the end, all Elon would have to say is, okay, we're going to start making robots, and then all of a sudden they'd gain that market cap instantly back. So I'm not too worried about Tesla. Same with Microsoft. So, yeah, that's the data and earnings. We can go ahead and get into the technical analysis.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into the technical analysis, as always, let's ensure the daily time frame is turned on and our moving averages and Bollingers. So let's very quickly get into this. We've been discussing over the last, I don't know, week and a half now, how the 5 mile is starting to pull back up, but the 10 mile and 20 mile really have not been moving. They've basically just been pretty much staying flat, pretty much straight. And with that price action happening, what has occurred is now we've had a massive bounce. And to me, this looks like the start of a brand new major uptrend. This looks like this area right here, or even potentially when we had the major sell off back in 2025 in April, where we had the major sell down here, where we started to see the 5 mile pulling back upward and creating the major trend. Now, one thing that I'm looking at right here is that from my perspective, and based on where the 5 mile is going to be tomorrow, very likely around the 692.20-ish. It could be around the 693. I'd be a little surprised, but with how quickly the price has been pulling back upward, um, the 5 mile can move up very quickly in tandem with that. So just make sure you mark that level. It's going to be very important. Now, the very crucial part here is that either we're going to have a push to the downside to retest that 5 mile, which can be towards that 692, 693 range before we have an upper Bollinger push, or we can really see that upper Bollinger push happen and the full breakout occur. We've been talking about the upper Bollinger push happening for quite a while now. It's rejected twice, and with those rejections, we've had some decent dip buying opportunities, but this one is looking like it's wanting to push all-time highs. And one of the main reasons why I'm saying that is the upper Bollinger currently is at 698.48. Well, the overnight price is currently at 697.35. Um, if it's going to have a push downward towards the 5 mile, it would have to push downward quite a bit. It would be probably close to a negative 0.80% type day. I really don't anticipate that happening tomorrow unless again we see a massive earnings fail, if we see major hawkishness from, Powell and the Fed. I don't really anticipate that though. Um, with the CB consumer confidence being as low as it is, with the ADP numbers still being very weak. And again, those numbers needed to be closer to 40 to 50,000 a week, not the 7.5 thousand it was at. Um, there's a lot of signs that's saying real weakness is coming within the economy. Um, so yeah, we can be definitely seeing a major push upward. I think that now that the overnight is reaching that all-time highs, it's definitely priming us to have that major push. We see within the ADL has just been slowly climbing back upward ever since the major sell down to that, forgot what it was, the 676 range. But from that sell to that 676 range, we've just pretty much been seeing steady buying all the way back up. Um, Technically, on the 27th, the moving averages are bullish again because, by all technical standards, we have the 5 mile above the 10 mile, 10 mile above the 20 mile. Within the short term moving averages, that is bullish. However, tomorrow it's going to look even better because the 5 mile is going to be even further above the 10 mile and the 20 mile, which means that we're seeing that bullish expansion upward. And that bullish expansion upward creates that gap where we have to test the 5 mall, test the 10 mall, test the 20 mall if we're going to have downside compared to this sudden collapse where we reject the upper Bollinger and then we see the 5 mall collapse below the 10 mall and 20 mall, and then all of a sudden the trend looks very nasty. Um, with this trend starting to pull back upward, this is definitely pulling us out of the woods. We're definitely um out of the tree line. We could see the tree line in the distance though. It's still nearby. A major sell from this range again can still turn things bearish. About 2 sessions of selling would turn things bearish again. So that is the concern from this range. However, we're breaking previous highs. We saw the lower Bollinger move, which again is one of the strongest buying opportunities you can get. Um, from that, it has just been an entire fair value gap to the upside, and that's exactly what we've been looking for. Now, the concern that I have, and I'm going to turn off the Bollingers and everything. I might have a lot of crazy drawings here, so I apologize, but let's just take a look. Okay, so we have some cool things here that we're going to talk about. We had this potential head and shoulders. Well, obviously, that has been entirely broken out of. I want to delete that one, that one, because currently we do have this cup filled. With this cup filled, we are now looking for bearish structure at the top. Okay, and if you haven't seen my videos, this is something we look for in every bullish cup, and I'm actually going to make this purple just so it sticks out a little better. But at the top of a filled cup is when we start expecting bearish structure to the upside. Um, what that means is we expect higher highs to start occurring here, but from those higher highs, we expect a larger bearish structure to occur. And the reason for that structure is primarily for bullish liquidity. It's going to create the handle pulling downward, and from the handle pulling downward, you get the liquidity to pull back upward again. So I'm actually going to remake this cup to further show that now that we actually have filled the cup to the upside, this is kind of what we're looking for at this point. Now, with us really anticipating the upper Bollinger move, we would be looking for the day one upper Bollinger push to give us that first high, the day two upper Bollinger push to give us the higher high into the downside consolidation. Usually that's where the 5 mile range will be. Again, this drawing is very arbitrary. Don't take these levels exact. Structure can be a lot larger or a lot smaller. So take this with a grain of salt as we start tracking this, okay? But this is kind of just ideally what I'm looking for. Now, from the upper Bollinger Day 2, with that higher high, that's when we take our short positions because that's going to basically be the top of the peak of the mountain, and we take those short positions into the 5 mile retest. Okay, and that's a very, very safe short. That's a back tested short, and that's something you can look at on your own charts. Just looking at the upper Bollinger moves when we have them, when we have the day two higher high, you see the 5 mile consolidation happen every single time. So it is a very strong move. It is something I am looking for. But with that said, many of us are in bullish positions still. I am not going to be trying to take profit until we get to that upper Bollinger push this time. With us rejecting it twice, and with this major selling channel actually being broken here, we can now delete that. And with deleting that major selling channel, we are now above the consolidation channel, which has been really, really difficult for the last few months now. And with us being up here, now we're looking to build support above this consolidation channel, which so far we are. The 5 mile is actually pulled above this range as of tomorrow. That's suggesting, um, short-term support is above this uh, upper consolidation range, and that's very, very likely telling us that the next room to play in is going to be up here. Okay, that's in the 700 plus. So I am very bullish on things right now. I know there are a lot of macro conditions that can definitely cause a lot of selling, but I'm going to show you some macro conditions that I think actually support what's going on quite a bit. Let's go to the USD JPY. As you can see right here, we're very far away from that danger zone now. Um, I talked about this the other day. Very likely that selling was due to the unwinding of Japan. And this is showing that very, very clearly. With this unwinding occurring, this is going to be showing us something else as well. And let's go to the actual DXY, which is the dollar. I can find it. Remember, I'm a blind man. I apologize. And the dollar is absolutely dumping. Now, when the dollar dumps, many people think, oh, our currency is weakening. That makes equities weaker. That's actually incorrect. Usually when the dollar is seeing weakness, you actually see equity strength, and you can actually see this within excuse me, it's hard for me to breathe right now. I've been sick for the last few days. I'm always sick. I apologize. You can see this within Ethereum. Um, And we can also see this probably within Bitcoin. We're seeing this very nice bounce. Remember, Bitcoin used to share a basically one-to-one correlation with the dollar, where if the dollar was seeing weakness, Bitcoin would be seeing strength. And, so far we are seeing a little bit of strength within Bitcoin throughout the last two sessions. Same with Ethereum. Ethereum's going to be tracking Bitcoin. And the FXY, we talked about this months ago, and many of us actually should still have positions in this. I do. I still have my 60 calls for March, and they're green now. Uh, this is the exact type of move I was looking for. Within the FXY, this is tracking the yen. This is showing that the yen is gaining strength, and this is a good thing for the market. This is a bullish thing for the market. Um, when the yen is gaining strength again, it creates the opportunity to reshort it. But when you reshort it, that means that you're pouring a lot of weight into equities. Um, sorry, I'm trying to scroll back to the SPY. And that's exactly what we're seeing right now is we're seeing a lot of weight pour back into equities. We're seeing that within the SPY. We're seeing that within semiconductors, especially within semiconductors, we're seeing this cup fill to the upside, and very likely that's going to create all-time highs within semiconductors and within QQQ, which is the tech ETF. We are seeing, we didn't see the upper Bollinger pushed today, but literally we're only cents away as of the close. Technically, the overnight is well above this level. So everything is telling us the market wants to push upward. It wants to see new levels taken, and it wants to see new ground. New ground. It's been in this consolidation range for an extremely long time, and the market overall is telling me that it wants to push upward very, very high. Now, within the HIG itself, we've also been seeing buying. I go ahead and turn off the Bollingers for a moment, but the HIG is tracking the high yield corporate debt. So if we're seeing bullishness here, generally that's going to translate into bullish equities. So again, this is another signal of upside range in the equities. So I'm seeing a lot of room to the upside. One of the concerns that I think many still have is that the VVIX is extremely elevated still. Um, you're absolutely correct to still be aware of this, and it's hard to determine exactly where this strength is coming from. Um, could it be potentially because of what's occurring with, the Bank of Japan having to sell securities and some of the unwinding going on? Potentially. Um, but I have not been seeing major signals of selling occurring. We have been seeing the VIX seeing a little bit of strength, but nothing major. It's pulling back down towards that 12 to $13 range, which hasn't been there for quite a while. It's currently at 16 something, but if we take a look at UVIX or even UVIXY, those are pulling down very, very largely. Um, everything's looking very, very solid. One thing that doesn't look solid though is the treasury yields. That's something we are going to talk about when I actually have time to do my longer trend video. So make sure you stay tuned for that. I've been wanting to make that all week, but I just have not had the time. I apologize for that. TLT is still traveling along this buying channel to readjust that. I'm not seeing the downside in that so far, and again, we are seeing some upside up in action, price action happening there. So, I do believe we had a second lower Bollinger move. We did, so I do want to circle that in red because from lower Bollinger moves, historically, you have very, very large buying to the upside. Um, so that looks good for TLT. The macro conditions for TLT though, there's still a lot to be concerned about, but again, we will discuss that in a TLT related video. So with that said, I'm looking for all-time highs to be pushed. I do believe it's time for it. With the upper Bollinger at that 698.48, and it will be opening higher tomorrow, very likely above that $700 range. That means that to even achieve the upper Bollinger day one, we would have to push at or above that $700 range to really even secure the upper Bollinger day one. So you can see kind of where this bullishness is coming from. A higher high from that day one for the upper Bollinger day two would suggest an even higher high than the 700, 701, 702 range. So potentially we could be seeing 704, 705, maybe even further than that. I'm not sure how much um equity weight we're going to be seeing pushed into this as quickly as I think we're going to be seeing some of this upside taken. So the bullishness does look very, very good. We just have to be very concerned with this minor cup right here forming a handle. But again, we are expecting bearish structure to be building at the top of this cup to really signify that there is going to be a handle. So far, and I'm going to turn off the Bollingers. This is the hourly time frame. I'm not seeing bearish structure forming here. This does not look like Head and Shoulders. This is cups closing to the upside. So this looks like it wants to see continuation. So yeah, we'll be discussing it tomorrow. Tomorrow's going to be a very, very important day. I will be listening to Powell live. I post on Weeble and in the Discord, so I look forward to seeing many of you there. Um, with that said, thank you all for watching. I appreciate each and every one of you taking the time to watch my videos. If you enjoy my content, if you think my content provides any form of help or learning or anything, please feel free to share it with others who enjoy trading stocks or potentially would enjoy trading stocks. Um, my videos have not been getting a lot of views. Not that I really care about that right now, but it would help to grow the learning community a little more, to be able to do that. So that would be great. But I don't really expect it. Just a comment in the comment section helps with the algorithm and everything. But you know, just stepping by to watch the video is enough for me. Thank you. I appreciate you. I appreciate your time. And I hope, what I do helps make you money. Um, or helps teach you the market or something else like that. So with that said, I hope each and every one of you have a great day, and I will talk to you in the next one. Take care, everybody.